Hi guys, welcome back to another episode on the channel. My name is Rolando, and on this channel we talk about all things personal finance, including how to manage and get out of debt, how to manage your credit cards, and ways you can maximize your personal wealth by investing. So in today's episode, we're going to talk about dividend growth invest, and our platform of choice will be M1 Finance. Now this isn't intended to be a review of M1 Finance, but I will share some of my pros and cons throughout this video. So without further ado, let's jump right in. So before we pop up the M1 Finance app, I want to discuss that if you've seen one of my videos in the past, you know that we've always discussed index funds and index funds and ETFs. And the reason for that is because they add extra diversity and it spreads out your risk tolerance through a whole basket of funds, limiting your exposure to one security. So one thing I've been doing a lot of research on is dividend growth investing, and I have a couple of requirements for this portfolio. First, I want to invest in the companies that I want to hold on to for the long term, probably throughout my entire life, maybe even pass this on to my kids someday. Also, I wanted to have a portfolio that would allow me to get at least 2% in terms of dividend yield. And finally, I wanted to use a platform that would automate my investments and keep my percentage in each investment the same over time. So let's hop over to the M1 Finance app and look at some of the investments that I currently have. I have to tell you guys, I've been really enjoying the M1 Finance app. It has a really good graphical user interface, or GUI for short, that allows you to easily navigate between your holdings. You can see stocks out there, you can do research, you can actually fund your account, and you can look at some of these expert pies. Some of these expert pies are pretty cool. You can actually check out some of the holdings for Warren Buffett and some of the other major investors too. If you go over and take a look at targets, if I can click on it, it actually shows you some of the investments, and it kind of gives you a preview of what pies actually look like. So a pie, as you think about it, is a whole piece of a pie, and each of those slices is each individual security, also known as stock. So as you can see in Warren Buffett's portfolio, if it actually pulls up, Apple is one of his stocks that he has, and it currently has a 1.34% dividend yield, and that probably has to do a lot with the beer virus. I'm going to say that so that YouTube doesn't destroy the algorithm of this video. So anyway, that's beside the point. So Apple makes up about 30% of his portfolio, and Bank of America makes up about 14% of his portfolio. He's what's called a value investor. So he finds the intrinsic value of a company, and if that security decreases in price, he gobbles it up. So without further ado, let's take a look at my portfolio. And I have to be honest with you guys, my portfolio is very small. I just started it. This was really like a test portfolio. So please feel free to leave your comments down in the description if you like the stocks that I picked for the long run, or if not, or if you can suggest some. And I will let you know some of my honorable mentions, what I didn't pick up so far. So let's take a look at my portfolio. And here we are, guys. Like I told you, I don't have a ton invested. I almost have about $200 invested, and my goal is to quickly get this portfolio to $1,000. I will be investing probably about $50 to $100 a week in terms of this portfolio, alongside some of my other portfolios. As you guys, I normally use Fidelity for my index funds and ETFs, but I wanted to try this out. And I have to say, index funds, ETFs, might be easier for beginners, but being able to pick your own stocks and see them going up and down is kind of fun. And I have about 26 stocks, so I'm pretty much well exposed over multiple industries. So if you look, Amazon, Amazon should be a staple. I shouldn't say should be, could be a staple in anyone's portfolio, especially if you're trying to get technology. Everyone knows who Amazon is. You know, they make Echo devices. They used to be a major book reseller. Also in the technology field, they have what's called as AWS, Amazon Web Services, where they host a lot of public cloud offerings. So Amazon right now makes up about 9% of my portfolio, and is tied for the highest percent of my portfolio. And if you take a look, this is one thing I do like about M1 Finance. If you turn the phone sideways, it actually gives you a little bit of graphic. I'm gonna turn it sideways. It probably won't look good for you guys, but anyway, that kind of lets you know what your portfolio has been doing over time. And I think it's pretty cool way they interface. It's pretty cool how they interface that with the app. Next up is Microsoft. Microsoft is another one of the technology stocks that has been growing pretty well and rapidly lately. Bill Gates is founder of Microsoft, co-founder of Microsoft, I should say, and developer of the Windows products, also known, and the Surface products, as well as the Xbox. So I'm sure you guys are pretty familiar with Microsoft. Next up, we have Facebook. And I also must point out that not all of these stocks pay a dividend. If you guys are interested in the dividends, I can definitely post that down in the links below. But if you take a look at this, it tells you what the average daily price is. It tells me what my average share price is. And it kind of lets you know what you spent and kind of what you spent in terms of buying your stocks over time, which I think is pretty cool. And if you take a look, you can probably barely see it at the top. There's a dotted line around your portfolio. That dotted line tells you that either you're above allocation or below allocation. And the next time you put money in, it will bring those stocks that are below the dotted line out to try to balance out the entire portfolio. The number on the right side of Microsoft is my target allocation. So that 9% is my target allocation. But as you can see in the last trading window, my Microsoft actually went down. So I'm sitting at 8.9%. So this is now below what I want my portfolio to be. So you can see where it says Microsoft is $0 overweight because it's actually underweight in terms of my portfolio. Amazon, where it's 9.10, is actually 20 cents overweight. So just to kind of let you guys know, and that will balance itself out over time. The next thing I have is Facebook. We all know Facebook. Mark Zuckerberg, ooh, that's hard to say 5 times fast, is the CEO and founder of Facebook, co-founder of Facebook as well. And it's the app that we all use. It's a social media network that we all stay connected with. I'm sure you guys know Facebook. They own other apps such as WhatsApp and Instagram. And I want to be a part of that digital age in terms of content creation and connecting people together. Next up is Alphabet, also known as Google. You know Google is the search engine. It also owns YouTube and Android, which is the device that my phone software is running on, so that's pretty cool. Next up is Apple. So Facebook, Apple, and Google all make up about 8% of my portfolio. So they're second highest on the list in terms of portfolio makeup. Apple is the maker of the iPhone, the iMac, and other projects too. Some of you guys are probably, if you don't have an Android device, you're probably using an Apple device. So you guys know who Apple is. Next up, I have energy. So I wanted to get energy because a lot of the energy sectors are kind of struggling right now, especially those ones in terms of oil, right? So ExxonMobil and Chevron are some of the key players in there. Then Royal Dutch Shell is another one. But I wanted to keep this about 5% of my portfolio makeup. Right now, they're still trending down, and that's fine by me. That means I'm still just buying the stock at a discount. And right now, that's why my portfolio is trending down. But almost everyone is trending down at this point. And this is what I also wanted to point out too, that you see that symbol next to energy? That is a percent of another pie. So you can have pies within pies inside of M1 Finance, which is a pretty cool a way to do things. Next up is financial. So this is a pie, another pie within a pie. So I have JP Morgan Chase and Bank of America making up about 5% of my financial portfolio. Also, Walmart, which is a stock that they've been saying is kind of recession-proof lately. So everyone's been hoarding everything, toilet paper, food, and all that stuff. I don't know why people don't just share everything. We have enough resources to share if everyone stopped just hoarding everything. But I digress again. But yeah, Walmart makes up about 5% of my portfolio. And even throughout the whole beer virus craze, it is either slightly up or right around even or flat for the entire time, which is pretty good. And that's pretty interesting to tell. Disney has been struggling as of late. One thing I like about Disney is obviously its parks and its characters and movies. Another thing is Disney acquired Hulu, 21st Century Fox, I believe, and they acquired another one. I can't remember. Oh yeah, they came out with Disney Plus. So I really like Disney in the long term, but in the short term, it is definitely underperformed. Beverages is pretty simple. I have Coca-Cola and PepsiCo, and they've been struggling a lot lately too, but that's fine. I'll keep buying them at a discount. They both pay pretty good dividends. I want to see if I can actually click in and see what the dividend rate is. Now I can't see what the dividend rate is from here, but you can definitely see it though, but I can't see what it is. But I can tell you it pays a pretty good dividend. Overall, my portfolio is about 2.3% dividends. And let's speed it up. I don't want this video to be too long. The next one is I wanted to be in the communication space specifically for 5G. And Verizon allows me to do that. Verizon is a long-term hold company for me. Healthcare space, I have about 4%. I have a lot of pharmaceuticals. At the end of the day, one thing in America, drug prices continue to be at an all-time high and they continue to increase. As long as we don't have any change in leadership in the next year or so, in America, we're having a major presidential election. I think healthcare will continue to be an expensive place. And as much as I may or may not agree with it, I think it's a good place to earn money in the long term. So these are my companies that I want to hold on to for a while. Merck, AbbVie, and Pfizer. All right, moving on along to waste management. Waste management in America Waterworks is below that. I kind of lumped those two together. They're basically my utilities. Waste management, as you know, is garbage disposal, and American Waterworks provides water. So these are essential utilities that we will need as our population, not only in the United States, but the world continues to grow. Intel gives me some semiconductor exposure. You guys know Intel, they make processors, they make SSDs, they make all kind of things for computers, whether in a data center or personal device. Home Depot is interesting. Home Depot is down right now, but Home Depot is one of those stocks that continues to go up when the economy is doing well because people are making home improvements as they have more money to spend. But I think in the long run, housing prices tend to always go up. Home Depot will be a good long-term investment, and they pay a good dividend. Also, healthcare, I have CVS. CVS has been doing a lot of things lately. They've been increasing their stores, and it goes along with their healthcare space. Visa is another part that I would have in terms of financial, but this is more in the credit card space. We're processing more and more payments. Again, as the world continues to add more people, we'll have more payments and things like that. So I want to be a part of that. Sorry about that, guys, about that quick cut. I had a text message come in and I'm recording my screen. I don't want you guys to see that. But anyway, moving on, I have Walgreens, Johnson & Johnson. Mastercard is another one similar to Visa. I couldn't decide which one I wanted to go with, so I just split the allocation up between 2% and 2% between both of them, and United Healthcare. And then the last one is United Healthcare is another healthcare. And the last one is Delta Airlines. Cruise lines and airlines are all struggling right now. I believe Delta Airlines is trading at like $20 a share. Yeah, it's like $23 a share. The price right now looks like it's $21, and it pays a hefty dividend, or it did pay a hefty dividend. Oh, that's also one thing I want to show you. It actually gives you news on here. It's saying that Delta Airline has suspended, as you guys can see, all its revenue. That is one of the downsides of dividend growth investing. When the economy is doing well, stock price tends to go up, dividend yield tends to go down. But when the economy is doing bad, dividend yield goes up, stock price comes down, but you also run into the chance that companies might suspend their dividends. And that is what I would say one of the biggest gripes I have with dividend growth investing is, yes, it's fun and it's cool to see that stocks that you pick individually and yourself grow or go down overall, but it's kind of dangerous in the sense the fact that you never know. These companies may not be around forever, and as much as I am diversified over 25 or so stocks, that does not give me the same exposure as an index fund or an ETF will. Overall, I'm still enjoying, this whole idea of dividend growth investing, and I do see my dividends growing over the long run. I think what we're going through right now is very painful but temporary. But anyway, let me know your thoughts, your comments down below. How do you feel about my portfolio? How would you rate it? Are there some stocks that you would have added, or is there some stocks you would remove? Some of the stocks that I didn't include, big ones such as Tesla and Netflix. Netflix has been struggling in the last 3 years in terms of growth, and they've seen increased competition such as the likes of Disney. And also, Tesla went through a crazy explosion about a couple months ago, and it's now kind of settled back down and lost about half of its value from its all-time highs. Oh, I forgot to tell you, pros in one finance. You can do fractional shares. It allows you to create slices of a pie. It keeps your portfolio auto-invested for you. Downside of N1 Finance is you only are able to buy stocks and sell stocks in what's called a window. That's how they keep prices down. So you only are able to buy stocks in my portfolio at 10 a.m. and it ranges from 10 a.m. to 12 p.m. Outside of that, you have to wait for the next day to buy or sell your stock. So that could mean something that's bad for liquidity. But overall, if we're building long-term wealth, then it won't be much of an issue. But anyway, for real this time, guys, that's going to be it for me. And I will catch you guys in the next episode. Peace. Oh, and don't forget to like and subscribe.